Hey, what's up, guys?
Same here. Kicking off the second live trading session for May 27th, 2026.
Good to see you.
Part two. We're having a pleasant Wednesday. Perhaps an Amazon kind of day. All right, so good to see you guys. Thank you all for the greetings. How's the audio sound? It might have been rattling around a little bit, but it should be clear. Yeah, it's a very fancy mic that I have. It's not clear. Okay, lots of static. Okay, let me check the onboarding mic, and I'll be right back. It's probably going through the computer. Should be good now. Should be nice and clear. Minimum 8.9. Alrighty, thanks for pointing that out. Sometimes I go a whole full session and nobody points that out. Not in here, but in the Mastering the Trade room. And I'm like, you guys got to get your expectations higher. It sounds like I'm in a cave, but this should be good. All right. So where do we start? Did we review last week? We probably could. I mean, we got some time. The market's really slow right now, like glacially slow. I think it's setting up for a buy. There's no other thing I could possibly even remotely consider here. If it is going to be a short, I'll just put it out there kind of to start the session. If there is a short in this thing, I'm just not going to catch it. So I was thinking about how to proceed with this session because I'm not really seeing all that many setups right now. So I'm open to be surprised. I've only really looked at a couple of things, and the setups that I do see in play do require a pullback. So potentially, unlike last week where we took 4 trades all on the day of the live trading and we managed to get out of all of them by Friday, today may be one of those days where we have to find something good and leave a open order to get filled, and then I'll think about how to manage that. The room will stay open, so even for the folks that are only doing 2 days of live trading, we will keep the room open. So any alerts or anything will reach you. But I'm not really seeing all that much here that is clear at the moment. So we have 3 hours to potentially change that, I think. So 3 hours is a good amount of time to change our minds. Let's start with this. Let's review last week, and then we'll dive into today. Do you guys remember volatility? I know that's an ancient word, but do you guys remember volatility? I don't. I don't remember volatility anymore. It's just easy as can be. Easy, easy, easy. Okay, so 4 trades last Wednesday. Let's start with the most clear one, which is DIA when we took it. So this one is just really clear. I'm gonna take some time to request questions here. Again, we have 3 hours. We don't have to really rush. The market's not doing anything. If I sound any kind of way, it's just because I've watched most of the action today and have been. I expected nothing, and am still disappointed. So we will have some time, and I would like to ask that you not be shy if you have questions, because it's easier for me to cover things live than to do it via email. So we'll take some time here. So we got Dow last week. It was one of the four trades. Just overwhelmingly clear trade. They all should look like this. Sometimes trades come up and they're very difficult, and they'll be like grays and some, you've seen it. It'll be like green something, and then something else will be red, and then something else will be blue, and then it's just it looks like a Skittles bag almost. And really, with those types of trades, like for example, we'll take a look at gold next. We didn't trade gold, but somebody asked me about gold, and it just serves as a reminder to drive home the point that I'm going to make on gold. But let me make this point first. Every trade, or the vast majority of the trades that you take, should look exactly like this. This is a proper setup, right? And it's really no surprise that it just worked, right? We got in, got out 2 days later, and I wasn't trying to make anyone rich with live trading. What I was trying to do is just pay for your live trading, right? And so if you add up the numbers for the trades that we took last week, it actually already paid for 2 days of live trading. Even if you only took three of the four, that still pays for the live trading for 2 days. And that's really my only goal, right? My only goal is to show you good setups, show you the process, hopefully make you a little bit of money, and then have some fun with you, right? So could I have held DIA here a little bit longer? Yeah, for sure. I mean, at this point, it would be actually completely in the money. So, and what's funny is actually because we have the 500 505, that trade is actually theta positive. So it's kind of a cool trade. But to make my point here, so I don't ramble too much, 3 hours is a long time, but it ain't that much. That's what everything should look like, right? So we got in somewhere in there. I don't remember exactly where. I think it was at 500 actually the day we got in. But that's what every trade should look like. If it doesn't look like that, then you're already stretching it, right? Also, when trades look like this, you want to allocate a little bit more money to them because they're very clear setups. So I'm going to take a moment here, and I'm going to go really slow to start with, but you guys call me out if it's too slow. Any questions on this trade or the setup or anything like that? I think this is the easiest one of the bunch. This was just like textbook, clear, like no ambiguity, no anything. How do you evaluate a trade when price is at 3 ATR and you're getting a buy signal? In this market, you ignore it and you go with the buy signal. No, I mean, here's kind of also the difficult thing about, I don't know if it's difficult, but it is something that at some point may breed bad habits, and that is this market is truly extraordinary. And what I mean by that is, and so let me go back to this and we can just watch this for a second as I ramble. So folks like to talk about the dot-com bubble, right? Now, during dot-com, I was in high school, so I didn't get a chance to participate. But in my opinion, what we're seeing now is even crazier. Now, mind you, I did not um, trade.com, but I did one thing. Last month, AMD went up 100%. Okay? And so what I did was I asked the all-powerful AI, I said, all-powerful AI, during the dot-com bubble, let's find a company that had like a really big run. And so the company that it found was Qualcomm. Qualcomm went up 1,000%, I think it said, that year. 1,000%. It sounds massive. It is massive. And then I asked it, all powerful AI, balance out the dollar amounts, right? So make to balance out the 1999 dollars with today's, which is a very important thing because $1 back then is like $1 million now. So balance out the dollars, and then find another company that has done what AMD did that's the same size, and it couldn't do it, right? And what you're seeing now is like these companies that are having these massive market caps almost doubling, right? 30%, 40% on trillion-dollar market caps. I tell you this because this is, in my opinion, again, always feel free to push back on this, but in my experience, and I have traded a long time, I just didn't trade during .com because I was too young. In my experience, this is a 0.1% market, right? 99.9% of the time, the market does not behave like it's behaving now. So, how does that tie back into your question? If you have a buy signal and it's at 3 ATR, the buy signal wins. In fact, in most markets, I would still say that if you have a buy signal at 3 ATR, the buy signal wins. In this market, there's no, I would even remove the 3 ATR from your chart because it's going to be useless. So, long way of saying, if you have a buy signal at 3 ATR, I don't even consider 3 ATR an issue in this market. You did remove it, yeah. Yeah, and that probably not a bad idea actually. Um, so let's stay on topic, and I'll just stay here on this one for 1 minute more, 30 seconds more. Any questions on DIA? Stupid question on your cloud. Are you using the A21 or the 2150? So it's the 20 and the 50, 20 EMA, 50 SMA. Robert, let's come back to that question. I think it's a good question, but I do just want to get through this initial part. So I'm going to do DIA. We'll look at Lattice. We'll look at Amazon, and then I'll come back to any general questions you may have. Okay, so it looks like everybody's good on this one. I'm going to move on. This one, hopefully this one's pretty. This one's textbook. Like this is, you could take a picture of it, put it in a textbook. It's literally like A, B, C, super clear. Lattice, Lattice is one of those that was just a kind of a ridiculous move, right? And so this one, normally we wouldn't be doing this. I don't know if we bought it at 3 ATR, but we bought it when it was up a lot, right? And silly goober me, I was like, well, let's buy it, even though it's up. But let's do it, using kind of a broken wing butterfly, meaning that we take some risk out of the trade, but we could still make a little bit of money if it goes up. Obviously, we bought it here. Had we bought calls or something, it just kept going. So this is a testament to this market. You don't see moves like this very often. I tell you this just because if you're new, take advantage of this, but also in the back of your mind, prepare to adjust at some point. So Lattice here, I think, is another one that's pretty straightforward. So maybe not a whole lot to talk about on this one other than just strategy selection, which I didn't get any questions about last time. So we bought it on that day. Obviously buy signal, it was in a squeeze. We did a broken wing butterfly. Normally if you're going to do a broken wing butterfly or a butterfly in general, you want to give it more time to develop and mature. For those of you that are still in this trade, even though it's down $5 today, you should be up even more than we were when I got out on Friday, right? So this one's just a kind of more of a theta trade, but the setup is almost the same. And then last up was Amazon. So Amazon here, we did 2 trades on Amazon. One was a debit spread, one was a butterfly. And because Amazon has weekly expirations, we were able to use a short-term expiration for that. And in general, I think both are fine. If you decided to hold both, I'm not entirely sure if you're doing better or not. I would imagine maybe so, because I sold it right here on the first test of 270. If you're in the butterfly, it's probably going for about like $3 maybe 250. Let me see what we got. I think we got 220 for it. I'm curious. Let me see what it's going for. It's actually probably up a little bit more than that. Let's see what this is going for right now. 65, 70, 2.5, 80. So it's going for about 288. Yeah, so it's up. I mean, if you use percentage terms, that's a decent little additional move, and it's kind of a theta monster too, at this point. So were able to hold through that pullback. That trade's looking pretty good, and there's really not a whole lot you have to do as long as the market doesn't go crazy up or down. And I think that's it. So we had two on Amazon, one on Lattice, and one on Dow, with Dow being the most clear of the bunch, Lattice being the second most clear, and Amazon still being pretty clear, but it just needs a little bit more explanation because it's not a max bull, right? Not a max bull. So index is here holding this double bottom like a champ. I mean, just remarkable. Really, really remarkable. It's just amazing, actually, because you put in this low, and you guys are using your swing levels, right? Hopefully you are. For the 15-minute ES, here's what I use, and it's capturing the highs and the lows perfectly. So I'll just share it with you. My number here on swing levels, maybe, well, I'm sure none of you have experimented with this, so this might be interesting. I use 50 and 100. So, and this is for a 15-minute ES. So there's no right or wrong answer here, though, right? The smaller the number you use, the more swings you will have. I don't care about tiny swings. I only want big ones. So that's why you have the upper line and the lower line, and that's what I do on that one. So that's the recap on last week's trades, and now it is on us to find the next one. And I'm thinking maybe. So here's kind of the thing. It's interesting that Amazon's the last one. I think we could reload Amazon, or potentially we could look at XLY. Now, kind of the same thing, right? Not really all that different, but I am seeing a lot of dynamism in these names at the moment with the XLY stuff. And so it's this kind of toss up where if I buy Amazon, which I could, I mean, it's got a squeeze, and I think Amazon probably just needs another day and a half, 2 days to really align itself. But being over 270 is a really big deal because of the Fibonacci at 270 that would have prevented it from working if it was basically if Amazon wasn't going to be good, it would stay under 270. And today, with the Nasdaq down, all of a sudden it just decides that today's the day it should be up 2%, which is a big move for a trillion-dollar company. So we could do Amazon again. Now I was thinking maybe Tesla would be an interesting play. Tesla does have a stronger score nominally, and so as I tell you, Amazon and Tesla, hopefully, for those of you that are experienced, you immediately made the connection back to XLY. Because one thing that I would find quite funny, in a not funny way, is if we bought Amazon and Tesla goes up 20 and Amazon goes down 2, and XLY would go up, right? Or vice versa, we buy Tesla, Tesla dumps 20, and then Amazon's up 3. Now we can meet in the middle here and just buy XLY, and then regardless of which one of these two works, it should have a positive feedback loop into XLY. So with that thought process, why don't we then look at this? And actually, one more point of order here, because I don't think I had a chance to show you all. So I gave the Mastering the Trade Room a little bit of a hard time because nobody was sending me their score sheet. Not that you have to. You're under no obligation to do anything. But when somebody who made the indicators that you're using offers to review your work, if I was in those shoes, I would probably take advantage of that offer. And so initially nobody sent me their sheet. It was like 5 people out of like 400 and something. And then quite a few people sent me their sheet this week. But I wanted to show you this one. And then we'll take a look at the this sheet here in just a second to see if this XLY idea makes any sense. So I wanted to show you what I think is a perfect example of a score sheet. This is something that somebody else sent in to me for review, and I thought they did a perfect job. So here's what I would consider a perfect job. So I want to start off by noting how many things this person did not fill in. How is it possible that I can call this a perfect job if they basically skipped easily 70% of the work, right? For the sectors, they did one. It doesn't seem like this should be considered perfect, right? Here's why it's perfect. It's perfect because this person will continue to do this every single week. I've gotten some sheets where folks actually filled out every single thing. And while I admire the hustle, truly, you are, and I say this in a complimentary way because I'm one as well, you are truly a sicko in the best of ways for those of you that filled it out completely. The problem with doing that is that if you commit to filling it out completely, you will have the energy to do that maybe once, or twice, or three times, and then you'll never want to do it again. So, to prevent that, my strong suggestion is to only fill out the things you care about, right? If you're never going to care about FXI China and you can't tie that back into a broader trading thesis, don't bother filling it in. So, number one, and very strong suggestion for the group, if you fill in your manual sheets, only do what you care about. This person didn't give a hoot about bonds. This person doesn't give a hoot about commodities. I can already tell you what kind of trader this person is just by looking at the sheet. They care about semiconductors and kind of go-go tech stocks. And then they even added their own stocks down here named Raccoon stocks. So they're clearly from the TG school. And then they added their own stocks that I might have missed. So fantastic work. In my opinion, this is already perfect. Then, and you don't have to do this, but this person really went all out. Then they added comments. Some of them some of them funnier than others that will help them make decisions. And then the last point, and you definitely don't have to do this, they went ahead and put all their notes from the class up here. So I thought this was just perfect work. Even if somebody did not do any of this, and frankly, even if they didn't include comments and all they did was fill in the sheet and only put the things that they care about, I would say that that was perfect. So, in my opinion, if you decide to fill out your sheet, and again, this is your vocation, I'm not telling you it's going to give you. Well, let's see. Let's guess. Don't put it in the chat, but how much edge do you think I would say that sheet's going to give you if you fill it in? Was it 50% edge, 20% edge, 10%? If you fill in that sheet, how much edge would you guess the creator of the indicators would say that it's going to give you? I would say it's going to give you 1% edge. You're going to say, wow, 1%. All that work for 1%? Now, mind you, if you have multiple monitors, you can do what that guy did that I just showed you, the perfect one. You could probably do that in 15 minutes, truly. 1% edge. I think that's fair, right? And so why do I make such a big deal about it? Because 1% edge is massive. It doesn't sound massive, but it is. If you've ever been to Vegas, you've driven down the strip, all those big buildings are built with 1% edge. So 1% edge over time compounded is a really big deal. So that was on the to-do list, so I wanted to get out of the way early. And we were looking at XLY, so let's see if this makes any sense or if I'm just crazy. And so it's a 97 short term, 68 long term. Let's spend just a bit more time on it. My inclination is to, well, I'll tell you my inclination. My inclination is I think Tesla's about to pop off and we probably need to be playing this. So there might be two trades and they might be basically kind of a double dip. So I think betting on the field on XLY, betting on all the horses having a good time, makes sense. And then as a sub bet of that, I think Tesla's starting to make some sense too. At least until the SpaceX IPO, which is in about 2 weeks. Just get a little bit of hype, and the technicals are mostly in line for this. So let me see if it's got any squeezes. It doesn't have any squeezes, but this is not a squeeze class. It would just be nicer if it did. Yeah, I mean, we could buy some Tesla here for sure. For sure. Okay. So off the top of my head, XLY being the dominant idea, because I'm seeing a lot of dynamism in there today. Like even things that suck, like McDonald's, is trying to go up. You know, Home Depot is trying to go up. Um, where's my where's my thing at? So if you look here, we got a lot of dynamism here. So let's do this. I'm going to take just a quick moment to answer questions broadly. There was no notice or alert about this session. Can anybody confirm that? Did you guys receive an email about this session? Or did you just have to know? You did? Okay. More than one. Okay, thank you. Okay, maybe it was just a one-off. Thank you, guys. That brings my blood pressure back to normal. It was right there. It was right about to go to the upper limit. I actually have exceptionally low blood pressure, by the way. I eat more salt than anybody you have ever met and probably will ever meet. I go to Whataburger, I get a triple meat burger with cheese, grilled jalapenos, and bacon. 3 meats. Texas size, of course. And then I ask them for 10 packets of salt, and I'll use somewhere between 5 to 8. Every bite I add a little bit more salt. And yet somehow my blood pressure remains very, very low. So my blood pressure probably wouldn't go high anyways. So I'm going to take just a quick moment here to answer any questions, and then we'll run some scans, and then we've got to really kind of start narrowing things down. If I can't find something better, then I do like that XLY Tesla idea, right? So here's kind of the thought process. My initial instinct is to, if I was playing chess, my initial instinct is to make that move, make the Tesla move, make the XLY move, right? But like I told you guys last week, when you see a good move, look for a better one. And so that's what we'll do here in the back half of this hour. Check out BE. Yeah, I looked at it yesterday. It's on my list to look at because it's surprisingly doing what the indicator says it should do. Now it did it so fast that it might be already over. But when I looked at it yesterday in the Mastering the Trade room, the hourly chart on BE implied that it needed to retest the daily 10. It was like $13, $14 off that level yesterday, and it did it today. But faster than you can even blink, it's already bounced off that level. But we'll look at it. GEV or fix. Yeah, we'll take a look at all these too. I'm just going to jot them down. Could you explain VLO and the actions I took after taking the trade? Well, there's not really any actions to have taken. VLO just is probably a trade that is not going to work. So if you recall, actually, coming into the first live trading last week, I actually was considering buying it with you guys. But if you also recall, I told you that there's no chance I was going to buy something that was going to get hit negatively by a tweet. And every tweet is exactly the same. So every tweet hits oil, and every tweet spikes tech. And so what did we do? Well, we just bought tech and Dow. So it kind of brings up just a very quick point in that not all signals are created equal, right? VLO had a perfect 2-day and a 3-day. It doesn't anymore. But it's in a sector that's being heavily pushed around by external forces and always in one direction. So it was kind of an easy call in this room to not take that trade. How do you decide when to get out? So there's just that's an entire class unto itself. I got that question earlier today in an email. Can I talk about stops? I'm gonna have to answer it generally because one, I don't know your time frame. I don't know what you're trading. If you're talking about day trading futures, it's a different game than swing trading Tesla. So I'll give you the two generic answers. Two closes below the daily 21 if you're swing trading. Very generic, very easy. Two consecutive closes below the daily 21 for swing trades. If you're doing anything else or even want to just use only the indicators and not ever consider two consecutive closes, if something that got you into the trade changes, you should get out of the trade. So if you got a buy signal and then it changes to a sell, obviously that's a get out of the trade situation. And that's really the best way I can answer that question without going into a 4-hour dissertation. So here's really the way I would answer it. That's going to help you, and no matter who you are out there. Imagine I'm standing over your shoulder, right? So let's switch places right now. I go into the crowd. You come here, and now you're talking to a group of people. Can you give 3 reasons why you're taking the trade? 3 reasons, right? And if you can pause, and you can do this really quickly because you don't have to talk on a mic. If you can think of the 3 reasons you're taking the trade, if at any point one of those 3 reasons changes, that's your stop. And you should be able to articulate those 3 reasons. Fortunately for you, I'm not over your shoulder because I'd be poking you with a stick telling me to tell me why you're in a trade. So have 3 reasons for getting into a trade. If one of those reasons changes, that is your stop. If you're still using level, momentum, and trigger in a specific order, priority, and if so, what order? It's always the same order. Level, momentum, and trigger. So you find a level, however you want to define that. I gave you a lot of different ways to define it. Look for a momentum turn and then a trigger. Even though there might not be a good setup, could you go through the approach to using day trading, using a 5-minute and a 1-minute, using our indicators? So today's going to be a very tough day because the signals are red and I will not short. It's just I'd rather not trade than go through the frustration of being short this market. So we can take a look. I'm always happy to take a look. So let's see what it says. And notice that when I'm personally doing a 1-minute and a 5-minute, notice that I go the hard way, right? Notice I don't have my little flags up or anything like that, right? I know the system well enough that I know where the flags would be and where they would trigger. So and this is obviously maybe slightly more advanced because I'm using, like for the big stuff, I obviously keep the flags on all the time. Flags on all the time. Personally, for the smaller stuff, I actually just trade using the indicators. So there's really not a lot of difference because, well, the only thing the flags are doing is interpreting the indicators for you. However, when you have a 1-minute chart, what is this called? Bonds. Whoever, don't ban anybody who answers this. The only person we can ban is Daryl Strawberry. What is that called? Okay. If you missed last week or the week before, or whatever, here's how I described it. I described those 2 lines as dry humping, right? I tell you this in a weird way so that you'll remember, because 5 years from now, you'll never remember if I told you the lines need to have a 1.5 spread between the true momentum line and the EMA. You'll forget that immediately. If I tell you if the lines are dry humping, then go with this, you'll remember that. So personally, I don't use the flags on a 1-minute and a 5-minute personally, but it doesn't change anything. It's just I just manually interpret the indicators. So right now, what I do here, I would do nothing. Right? I am watching the day trading stuff, but here's why I would do nothing. One, the Bears had their chance to break the low there, and they didn't. And if and frankly, here's also a really big component of this. Every day you come into the market. So here's you. Let me make you more aesthetically pleasing. That's you. And you come into the market and you have two choices, long or short. You could put flat over here, but that's boring. Long or short. Just so you're aware, I've completely eliminated all of this side. So for me, almost regardless of what I see, and this is because we are in a 99.9% aggression market. It's very important to understand this. The context of the environment is really important. 99.9, I will die on that hill. 99.9%. So I'm only allowed to be long. See all these red candles? Oh my God. Who cares? Right. So it's the reason I'm kind of not going down this road, or maybe it's not the best day to cover day trading, is because I'm going to tell you, if any signal you see is a buy, and that's not good advice, right? But it's good advice today. And so you have to be able to understand two things at once, right? One, I'm telling you, any signal you see is a buy. That's not good advice, but it is good advice today, and it will work today. So I don't know if today is the best day to cover day trading broadly. However, if you have very specific questions, I'm more than happy to help you there, because from a day trade perspective, this should have broken here and taken out that low based on the indicator set. Oh, you got some of you guys got $3 for the Amazon trade. It's pretty good. How do you fill in the squeezes on the sheet? Just type them in. Yeah, here's kind of the thing. There's no right or wrong answer to this. Like this guy did a fancy way of doing it. Like you see how he put like green. Like I don't know Excel well enough to even know what he did here. So he did it fancy. If it was just me, I just type in D. Like, oh, it's got a daily squeeze D, 4 hour squeeze, you know, 4H, whatever you want to type in there. And it surprised you on some tickers. I've gotten that feedback a lot, that folks are seeing some maybe things that they would not have expected once they did that. If you're using the 8 and the 21 EMA instead of the 10 and the 20, would it make sense to change the settings for the trailing ATR from 10 and 3.1 to 8 and 3.1? No. No, those are going to be two different things. No, feel free to use the 8 instead of the 10 if you want to. I think that's more classic anyways, but I use the 10 and the 20. And the indicator won't really change too much, because if you remember how the buy zone works around the 10, it has a little halo around it. You know, it's just kind of the way I'm describing it. So as I yap, are we missing Tesla is the question. Tesla's probably going to be the play, guys. Like it just kind of hits the mark. Like I was already looking at XLY. XLY's firing long today. Tesla's going to be the second biggest component of it. In order to get XLY to go higher, they need to push either Tesla or Amazon. It would be really funny if we bought Tesla and Amazon went up and Tesla went down. So there might be an excuse to then say, well, let's just buy XLY. But I just keep kind of coming back to that Tesla, just from a hype perspective too, because the setup. So here's the thought process: the sector checks off, check on the sector. The stock, check on the stock. Obviously, craziest bull market I've ever seen. Check on the index. And then this is not usually common, but does it have like this thing that it can run into, being the June 12th SpaceX IPO? And it does. So, kind of hits all the notes. Maybe it even hits an additional note of the hype run. So just to finish the question around the 10 or the 8, if you use the 10 or the 8 over the 10, it doesn't really matter because remember that the buy zone has a built-in kind of halo around the 10, and so it'll catch anything that's around there. And so we'll continue to kind of take it slow here until the top of the hour, and then we're going to spend the last two really making some choices. But I think just talking this out is generally helpful because it helps talk out any biases. Like, I don't want to start with a bias, although I kind of feel like I might have already. But it's from a technical perspective. Like, I don't want to get tunnel vision and say Tesla, 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 Tesla. So let's maybe do this. Sorry for the fragmented structure here, but I only see you once a week, so we got to cover last week and then build on this week. So real quick, I'm going to run the bull scan. The bull scan. And I'm going to get rid of the 2-day filter on the squeeze. Be mindful that the way that I shared the bull scan has squeeze inputs. If you want just pure high scores and you're not going to be all that focusing on squeezes, I would get rid of the squeeze inputs completely. For myself, I do typically like to have a squeeze behind me. So let's check this first. So we're looking for bullish alignment. This says weekly, but remember, it's a higher time frame, so it's really daily. We're looking for bullish alignment on the daily. We're looking for bullish alignment on the weekly. We're looking for an EMA score above 40. We're looking for a trend oscillator score above 40. And we're looking for stacked moving averages. Now, there's more inputs that we could add to this. Like we could add a trailing ATR position. We could add high-low. But I like to. The reason I gave you this one is because it's basic enough to filter down almost everything. And then you can just, check the work manually from there. So let's see what pops up here. I'm pretty sure Amazon will be in there somewhere. Number one, what do you know? When the true momentum indicator is looking clearly bullish, do I even bother looking at the high-low? I don't want to say no, but in general, it doesn't really matter. It matters. Let me show you an example. I can give you a perfect example, which is actually ties into this. So it's a wonderful segue you just offered me. So the question was, when the true momentum indicator is looking bullish, do I bother looking at high-low? So what about Amazon? Kind of has that situation, eh? Clearly bullish. Remember, you always want big spreads. We don't want dry humping, we want big spreads. So clearly that is the situation that you're referring to, and then it has this little wrinkle in the system of like, well, what do we do with that? But notice that even though it has had a down arrow, this is a much smaller input into the total score than this. This is really the indicator. Like the star of the show by far is this. And that's not like an opinion, that's just the mathematical input. This is like 40%, 35% of the total score, right? This is 20. So, and note also that everything here on Amazon is perfect, except one thing. And that one thing just knocks it down from a max bull to a bull. right? So the trend here, dark green equals perfect trend. Blue Momo is, neutral to up. This is getting full points, and you're losing points here, right? So everything that we would look at is good except this. Note that that already is factored in, and the candles remain green. So I think that might answer the question: is when the true momentum indicator is looking clearly bullish, do I even bother looking at the high low? In general, as long as you have a 75 bull or higher, then you can ignore the high low until that changes. Good question. National Burger Day tomorrow. All right, I'm sold on McDonald's. Is there a pattern on the sheet that we should be looking for? I'm not sure what sheet. This? Let me know. How about a short on gold? Okay, here's what I'm going to do. I'm going to get through the questions as much as I can, and then we're gonna run the scan. So I already ran the scan in the background. We'll run through it and see what is viable today. The gold short idea is actually really interesting. Let's see if it's still interesting, because I thought it was interesting the other day and never revisited. So primarily because of the squeeze here is just so bad. I'm not entirely sure that gold short kind of hits the notes I'm looking for. While I can definitely see that why you're shorting gold, absolutely. One thing I'd point out is that gold is kind of its own thing. And what I would prefer, where I think we're going to have the most amount of edge, is we know that we have a bull market in the indexes. And then if we can use that edge, right, then we know that we can have a bull market in some of the sectors. And then we look for a bull market in the individual stocks within that sector. And then we have we have three things kind of pushing at our back. With gold, it's kind of its own thing. So is it a short? It's more of a short than a long. The only thing that would concern me as a short is you see this low here, and you see how it flushed the low, huge volume back above the low. So I wouldn't be able to look at gold short, GC short, until it breaks 44 half, 44.50 again. Let me do this. I think it's a decent idea. I just don't have as much edge to do this with you guys as I think I do with something like Tesla or XLY, or maybe even Amazon. But I'm going to leave an alert here for myself. USO for a continued short. Well, it definitely broke. I'm not really seeing this one overly clear. If you guys are hard up for a short, here's one that I do like. So I would not mind shorting Uber with y'all. We'd have to give it a little bit of time, maybe July, go out of the money. I had a pretty decent Friday to Monday trade on this in the main room, and this one popped up on the scanner or something to short. So I'd be more kind of interested in that. Let me just kind of go back for a second on USO. Even though I'm not going to short it, and I wouldn't blame you if you did. It's from the inside out. I'm sure it's a mess. And from the outside in, though, I don't usually like shorting things like this, right? So let's go to the sheet. Not that one. This one. So what does CL look like? So CL is negative 22%. From the inside, it's actually pretty bad. It's a negative 85 from the inside, but it's a negative 22 total. The one that I showed you, which was Uber, is a negative 88. So I usually try to align more with something like that. How to use the gap between the fast and the slow lines wider, but the gap the stronger the bullish. What? How to use the gap between the slow and the fast lines? Is it wider the gap the stronger? Yeah, yeah, yeah. So the bigger the gap, the stronger the directional bias. That's why you don't want them over each other. The cat theory that I talked about. No, I mean this is all pretty standard. Like I can't call cat every time that they save a low. I personally would have liked to have seen the low break just because I'd like to get better prices with y'all. Like, and we're getting into the top of the hour, so we'll start getting into some real brass tacks here. I just wanted to kind of lead up with some follow through from last week and talk about the sheet and take some questions. So yeah, personally, I would have loved to have seen this low break because that means that we probably could have got a better entry on Tesla if we decided to trade that. Is this the cat? Some people are like, "What's the cat?" No, I mean this all looks pretty standard. You're just in a wildly bullish market, and my advice for that is just in most cases ignore your sell signals. In most cases, or maybe better, correctly stated, wait for a buy signal. Use any pullback as an opportunity to look for a buy signal, not as an opportunity to say this is the end. How much does the cloud really help me? Tremendously. There's not one single pixel on my screen that I have not put through the hottest of flame to see if it can survive my criticism. Not a single pixel. Like, for example, you see how even all my names of my indicators are white? If you look, some of your indicator names will be red or green. This is something I had to code in. I'm that obsessive. There used to be like I could have it so it'd be like more data here. Took that off. Every single pixel on my screen is there for a reason. I tell you this because I want you to consider that on your end is what is every pixel on your screen doing, right? This is very valuable real estate, or at least it should be. You should consider it very valuable real estate, what is on your screen. And if I was over your shoulder and I was like, what is this line for? What's that line for? What do you do with that line? What does it do? How does it help you? You should be able to answer those questions. So is the cloud helpful? Yeah, it's overwhelmingly helpful. It's actually one of the simplest and more helpful things. All right, we'll go another 5 minutes or so on top of the hour. Maybe take like a 5 minute break, and then we're going to dive into the scans and see if we can find something better than Tesla and XLY. If not, then it might just be Tesla here to the moon. And conceptually thinking, how do I play this with you? And we'll figure that out once we get there. So I'd be pretty surprised if we don't end up buying some Tesla today, meaning that I'd be pretty surprised if we found something else. But that's what the next hour after this one's for. Is Tesla too high above the 21 EMA for a good entry? Technically, that's a good question. So I think technically, yes, it is. And I like that you called out the 21 because that is where the indicator would tell you to buy it. This is not a 10 EMA kind of setup, but it is a kind of a. We just are in a ridiculous time. So this is kind of the same situation as Lattice last week, LSCC. That one we bought up. It was like about 15% when we bought it. We should not have made money on that. No one should have made money on that. Right? Like in most markets, you chase something up 15%, you get smacked up. It's not the case in this market. So I'm not saying the trade's going to work, right? By any metric, it could certainly fail. But one, good question. This is a rather large distance back to where it should be bought. It should be bought at the 21. And you should be able to tell me why I said that too. Is the bull, anything that's not 95% or higher triggers at the 20, not the 10. So we have some questions to answer here towards the back end. Like, okay, Tesla. Okay, well then, if we're gonna play Tesla, how do we do it? Where do we want to try to buy it? Even the 10 is $17 lower, right? So we're going to have to make some decisions. But I think that's a good question, and I think it's a valid question. The white lines are 70, 50, and 30, but in the bonus class, there were 80, 50, and 20. Do I use both the white lines? So make sure you're looking at the same thing. So on true momentum, the lines are 70, 50, 30. On high-low, they're 80, 50, 20. No, the white lines have never changed. Tell us about this. Michael, I need more information as to what you mean by that photo. The cloud is the 20 and the 50 SMA. 20 EMA, 50 SMA. The extreme. What ticker was that? It says extreme because both lines are above the upper line. This was covered in the class, so I'm not going to spend too much time on that because there's an entire slide. There's an entire slide on the class that covers what that means. I'll take a look, but this will be very fast. So extreme just means that both lines are above the upper white line. That's it. There's a whole slide on it. So yeah, both lines are above 70. Just means to it just means to move up your stops. I wouldn't view it as like a negative thing. It's actually can be a quite positive thing. But here's the one thing. So this allows me a good segue. So extreme on true momentum can persist for a very long time. The adjustment to make for extreme conditions on true momentum is that I would just have tighter stops, right? I would not have wide stops on that. I certainly wouldn't allow it to get below the 21 on that time frame. On high low, extreme is not sustainable for a long time. Most of the time, like 99% of the time, it's not sustainable. So just be aware of that dichotomy there. All right, so let's do the work. So that's enough yapping. Let's go back here. Amazon TSM. I sent out an order on Friday in here to try to buy TSM. I was trying to do put credit spread, but I was maybe a little bit too greedy. I didn't think I was greedy, but then everything gapped up, so maybe I was. So we got Amazon, which you know about, TSM, Avgo, UMP, and then a whole bunch of a lot of nothing. Okay, so let's organize by industry. REITs. Very fun. Semiconductors. A lot of biotech. Not a huge theme. Seems like there's a lot of everything here. So I always just suggest making note of that. You know, if you start to see like J.P. Morgan and Goldman and Morgan Stanley and BlackRock and the rest, you know, then there's a kind of a theme there. One thing that I was seeing that could be a theme that's a little off the beaten path, for better or worse, was the rails. So let's start finding some candidates here. So something like CSX. Beautiful pattern. Let's try UMP. Oh, God. Okay. All right. All right. Before the chart even loads. All right. Okay. So we might have to get some of this. I really hate chasing a rail at 6, but This is quite proper. This is the other one. This looks gorgeous. Oh, jeez. Are we really about to buy some rails, guys? In a world full of AI, are we really going to buy some coal-driven trains? Okay, so thought process. What came up on the scan? So it was UMP. Okay. Now, off the top of my head, I knew that CSX was one because it came up in the main room. But notice UMP came up here. NSC is here, right? These are both rail companies. There's not that many. The other one's CSX. I looked at both. They both look fantastic, like super fantastic. So that makes the signal even better, right? Why is that? Because the entire sector is showing the same signal, right? The last thing I would check, and this is just me really doing like the work here, and yeah, this is just absurd. Yeah. So wow. I mean, this pattern is disgusting. Look at this pattern. I don't really like pointing these kind of patterns out all that much, but in this case, that kind of looks like a giant one to me. I mean, isn't that a classic one? Okay, so this hits every note, and it actually hits the note even better than Tesla and Amazon. Now, of course, we are in a Tesla and Amazon kind of market, so we'll still probably still have to buy those, but immediately we have a contender here. UMP is the bigger one. It's the most liquid one. The other one was NSC. Yeah, okay. Okay. Well, our work might be done. UMP, NSC. The only thing really missing with those is just an entry. You know, like it being at the buy level. So, and also liquidity. Liquidity is kind of bad in these names. Let me poke around here on the chain, and then we're gonna come back and see what we can do here. So first, I'm gonna look at UMP. It's actually not that bad. It's actually not terrible. Somebody buying a lot of the 285s for June. Okay, I know that UMP is the biggest one. I'm just looking at the chains on both. So NSC is just we're not gonna be able to play NSC. Okay, so NSC's off the board just for no other reason other than liquidity. There's no way we can play that. There's no one else playing. Beautiful pattern. If you're a stock trader, this is a beast. Because we're going to be playing with leverage and options. We're kind of forced into this one because this is where the liquidity is. We could consider CSX. I just don't think it has as potent of a setup. Actually, this is a really badass setup too. This is a really good setup. Okay, so we'll go with UMP. Okay, so a couple of points here that'll make you better. This wasn't taught in the class, but I think it'll make you better. The IV label, it's red. It's going to make calls a little bit more expensive than usual, right? That's what that means. So what does that mean? Well, it also means that premium selling probably makes more sense. So selling the 280 puts for June makes sense. And if we could do that for $5 on a 10 wide, I think that's a good price. So we're only 5 minutes into the new hour here, and we already got some stuff going on. Initially, my thought process is we sell the 280 put 10 wide for June, and we try to get 5. When you see a good move, look for a better one. Okay. I really don't want to do a butterfly on this one. The pattern is just too potent. And if this IV was green instead of red, I would just do calls. So one idea is to do the put credit spread. I think that one makes sense. It's a nice chill trade. Basically betting it gets to 280 and then just stays there or above. If we were to get a $5 credit, our break even is 275. I like that trade a lot. Let me see if I can find something better. So the alternative is going to be well, the alternative is identical actually. The alternative is identical. No, wait. Give me a second. It's not. It was 280, 270. The alternative is 275, 285 call debit spread. Break even is 280. I think I like the put credit spread more. Okay, bear with me a second. I'm going to be right back. They shut off my water to work on the pipes, and then they just turned it back on. So I just got to go do that real quick. 1 second. All back. Let me see if I can get filled on this one. At $5 for the 10 wide put credit spread, that one actually is not bad. I mean, they're not giving a discount today, certainly, but... And I doubt they'll give it to me at 10. I'll be pretty surprised. But let's see. Or, excuse me, not 10, 5. It's a 10 wide. So I'm gonna post the trades that I'm looking at here. I'm gonna just copy and paste them. So I'm looking at the 280, 270 put credit spread. There's no way they give me 5 for those. Let's see. Yeah, there's no way. Even at 480, though, it's not bad. Let me see if I'll even do it at 480. I don't even mind that. That's actually still fine. I'll do 475. Let's see. Yeah. The problem is it's a little wide, so the number that you see on the screen is not necessarily reflective of the number you might actually get. Let's try 470. Yeah, they're not playing ball. Okay, so here's what I'll do. I'd like to get this for 5. Oops, sorry. Where did that come from? That's it's an alert from yesterday. Let me delete that. Not the right one. So here's what I'm trying to do. They probably will not give it to me for that price. If $5 would be kind of crazy, to be honest. So I think maybe like 450 we could get it right now if we really wanted to. Let me also post it in the alerts. Working order on UNP, not expected to fill, but leaving as a placeholder in case I lower the credit asked and enter today. So this is obviously not a filled order, it's a sell, not sold. And the alternative would be something like the 275, 285. And that one's going for 435. I don't like that one as much. Yeah, well, you did 460. 460 is pretty good. Yeah, that's good to know. Thanks for letting us know. 460 is not bad on that. And I'm looking at the debit side to see if it makes any sense. And I'm kind of debating it because, well, let me do this. Sorry. I do all this stuff in my head. Like some people use like the analyze graph. I don't necessarily like doing that, but sometimes when I'm doing too many things at once, it can get a little bit complicated. So I'm just going to take a screenshot of both the credit side and the debit side and then compare the Greeks and the risk. Okay. I like the put credit more. The alternative, if you're just inclined to do it on the call side, and I'm open to debate on this, certainly. The alternative trade on the call side is 275, 285 call debit spread. $275, $285. It's going for 4.5. The break even on that would be right around 280. The break even on the put credit is 275. The Greeks, you get a little bit more delta on the debit side, just nominally. Yeah, I like it more on the put credit side. And then for 460, that's not a bad entry. That's a pretty good entry. So if we can still get that by the end of the day and nothing else has changed, we'll just grab it at 460 and let it do what it does. So that's a pretty clear one. I don't want to ever jinx things, but this one kind of has the same vibe as the Dow, and so that it's very clear. It's actually maybe just slightly less clear, but this is still a very high clear trade because the pattern is good. It's wrapped around max bulls everywhere. The squeeze histogram is ideal. You know what? I'm just gonna have to grab it. Like we don't really have that much choice. Tomorrow, if it goes for 5, I would probably buy more. So let's see if they'll still play with me here at 460 on that. We'll give it to you now for 420. Like, no. Why was I greedy? Why did I so greedy? So I'm going to bid 460 on that posted trade. Grr. Which one of you tipped off the market maker? Now they demand a tip. Try 455, just in the interest of getting in. It has enough time. It has a good setup. I can tell you that the entry here is not precise. This is not precise at all. But there's limitations to doing live trading, so we have to do it this way. All right. See 450. They did not play with me at 460. I don't really want to do below 450. 450 is kind of my line in the sand on this. Okay. I'm going to let 450 work for a bit. We got a tweet. Surely we got a tweet, right? Call spreads on UMP. Yeah, you can. I just from what I saw, the risk to reward is seems to be a lot better on the put credit side, and the risk is about $1 more. So what I priced out was the 75.85 for June, 75.85. Now I was going for about 4.5. The trade that I'm trying to do has about 5.5 of risk. So for an additional $1 of risk, my break even goes from 280 to 275. So, and I don't think there's anything wrong with doing the call debit side either, to be fair. But just in the interest of trying to align edges, that dollar extra of risk that I'm taking on, but will move me $5 closer in the money, I think that's worth it. Remember earlier when I told you to ignore all your sell signals? Now you see why. Now you got me thinking. Do we just give up some tiny amount of edge? go with a lower risk that'll give us more delta kick and do it on the call debit side. Here's the thing. Here's really the answer. Here's really the answer. It sounds like I'm hemming and hawing. Here's really the answer. Let's just cut right to the point. The put credit side is a little bit less reward and less risk. The call debit side is more reward and more risk. Maybe that's not even the right way of saying it. The put credit side is slightly more costly, but almost nothing needs to happen. The call debit side is slightly less costly, but much more needs to happen. I think that's accurate. All right, and then lastly is going to be Tesla or Amazon. Okay, got filled at 450. So now we actually have a proper fill. Nice and proper. I do think you'll be able to get that for a better price today or tomorrow. But the setup is quite good, and we have quite a limited cross section of time to work with. Like, the one thing I don't want to do is like leave an order for 5, which I think is the right price, hoping it gets filled and then it takes off tomorrow, and then that was it. Like, we don't have another chance to chat. So let me post this one. No, I'm not compromising at all. No, I wouldn't say I'm compromising at all. What I'm trying to do is just be extra meticulous with my execution in terms of what strategy I choose. Because, like, for example, on UMP, there's actually an argument to make that you could get away with just buying the 285 calls. Pull up the chain yourself. If you pull up the 285 calls for June, somebody bought 3,000 of those today. That's more than everything else combined, even into July. So clearly somebody's plowing money into the 285s. The setup justifies it. They're not cheap, certainly. They're certainly not cheap. Not that, when I say not cheap, I have to be really clear as to what I mean. I'm not saying that $4 is cheap or expensive. That's irrelevant. They're not cheap because of the high IV. That's the common language. So there's an argument to make to even do the 285s. I think that if you do the 275, 285 call debit spread, I think that's perfectly fine. I like the way that I executed it with the 280, 270 put credit spread. I think that's perfectly fine. I can make an even argument for broken wing out of the money butterfly. So it's just a matter of. So notice that it's not a compromise. I'm not saying like, oh, I don't want to do this, but I have to do this because we're live trading. There's a smorgasbord of options in terms of ways to play this, and I'm just trying to choose the one that makes the most amount of sense, that brings up the least amount of friction. In a different world, I think one really cool play here that makes a lot of sense, that's very low cost and has a high reward, is a broken wing butterfly. But I don't want to over-egg the omelet, so let me just post this trade. To open, I was filled at 450, by the way. UMP along other similar names like NSC and CSX are showing max bull daily charts plus squeezes, full coverage of the rationale of the trade is in the live session recording. Is there anything else that needs to be said? Size for max credit to control for risk. Okay. Okay, that was one. That was one that was not even on my radar. I got that one from the scanner. So let us go back to said scanner. And I think we would do well if we could do one more. And the question is, which one is it? Amazon or Taiwan? How much can we chase Taiwan? UMP has a dividend. Puts might be better. I don't know what you mean. No, the dividend, it shakes itself out of the options. It ends up not being an issue for the options. And let's say that it is, and because the dividend will come out of the stock price. Normally, it shakes out of the options, so it's not going to affect you positively or negatively. In the event that it does, I haven't seen it, but let's just spitball. In the event that it does, then doing it on the put credit side actually benefits you. But I wouldn't anticipate that. I think that the dividend will end up having a negative effect on the stock price, but the options actually shake out. Okay, so got a couple of options here. XLY, Amazon TSM, Tesla, and we could even consider Bloom, BE. Wow. Look at this one. Holy schmoly. Wow. I told myself I would only buy tech today. Make life simple. Life is quite simple when you buy tech. You can't miss. This one's quite potent. So let me walk you through the process on this one. I didn't expect to look at this one. This is not this that one. The one we're looking at here is not even on my sheet. So the only way I would have found it is with the scanner. So SPG, SPG. Where does that? What sector is that going to be kind of in? It's not cleanly in any sector, but I'm just testing you out here. What sectors should we be looking at for SPG? It's probably a combination of two. So probably real estate and retail, right? A little bit of REITs and a little bit of retail. Yeah, no, SPG is Simon Property Group. It's the one that owns like all the outlet malls and whatnot. They probably own a lot more other things. So that's going to land here. XLRE. Okay. It's a 95% total strength with a daily squeeze. Now, do I want to buy XLRE? Not really. Although it looks fantastic, don't get me wrong. It's just I don't really trade this, and I'm fairly certain it's going to be a liquid. But the fact that the sector looks this good is a bonus. So then we go back to SPG, and it's like, well, damn, the pattern is a monster. I mean, this is actually very textbook too. You get the pump, you go into gray consolidation, green triggers on here, So this kind of looks like a giant flag to me. You don't want to overthink it, but it's actually quite nice. Let me go back to Tesla. Am I forcing the Tesla idea to impress my friends? Look, guys, we made money on Tesla. What's funny is pound for pound, SPG is a better setup. It's in a better sector, and it's a better chart overall with a better squeeze. Okay, let me look at the chain. There's really not that many ways to trade that one. We could have a little bit of fun with it. We could buy the 210 call for June. Might make more sense to do the 210 call for July, just to make sure we give ourselves some time. I don't think we would need it. I don't think we need that much time, but doing it for June's a little spicy. The 210 call for July is pretty much right. Well, now I'm in a quandary, guys. I came into today with high expectations of buying XLY with you, and I've been, I've been siren songed by railroads and outlet malls. But you can see why, right? All of this makes sense. Okay, so that one was not on my bingo card. We have about 90 minutes left to make one more decision. I'm going to be happy with just two trades today. I mean, if we could find more, I'll be happy with that. But I'm good with if we just do two. And here's my thought process, and feel free to start a conversation with this. My goal with the live trading is just to pay for your live trading, right? And so the way I see it is every day of live trading cost $100, right? You did the 2 days, the one in the middle, whatever that package was called. It was 200 extra. If you did the elite, it was 400 extra, right? So it's $100 a day basically for live trading. In the first live trading, we made three. How much did we make? 177, 73, and 85. And that's just on a one lot. So what is that? 250, 335. So the 335. So if we can if we can find like two trades, that covers. Well, frankly, the 2 days of live trading, if you just did the middle package, it's already covered. So just doing two of the best setups probably makes sense. UMP's one. SPG is a very good setup. I don't have that much history with it, is my only concern. But it is a monster setup. Let's keep going. We'll come back. I wrote it down. I might have to. Here's what I might have to do. What I might have to do is take SPG on my own, and then we'll do XLY or Tesla together. I kind of feel like that's a good happy medium. So let's spend a minute here on Amazon, TSM, and Avgo, and I'm gonna use the sheet for this. So this is just a fast version of what we would normally do. So Amazon right now is a 76. Avgo is a 77. Are they really on top of each other? They really are. TSM is a 92. That one was my favorite one. Just hits the most notes. And what was the other one? I'm forgetting one more. TSM, Avgo, Amazon, and Tesla. And Tesla is an 84. Okay. These are all pretty close. TSM obviously wins. So we got to have some fun with this one, guys. We're going to probably have to buy it. Probably the 210s for June or July. I'll make up my mind in a bit. Okay, so let's look around. And this pattern on Avgo is kind of funky looking. I'm going to pass on Avgo. Between Avgo and TSM, I'm a little bit more familiar with how TSM will move. The one thing I like about Avgo is it's kind of near a buy zone, like it's very close to a buy zone. I think they might have earnings coming up. Yeah, until the 3rd. Yeah, it's next week. Okay, so Avgo I'm going to cut out because it's just it's too short of a runway before earnings. Between Amazon and Tesla, Amazon is a little bit difficult for me here, and I'll explain why. And again, I tell you, it's difficult for me only because we are in a market that has an embarrassment of riches. So, you see that histogram on the squeeze? I'm not a huge fan of that. Right? I think that there's two things that if you're watching Amazon here that I think will kick it off. The first is two things. Getting above this key 618 at 69, let's just call it 270. That's going to be a big one from a structural perspective. We sold ours here or somewhere in there initially last week. So this is a big level. You can see how they bang, 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 try to get through, fail, catch at the 200, push again. It's doing the right things, but there's two things that are preventing me from winning this, or let me rephrase that, preventing me from prioritizing those over better things. The 618 needs to break 270, and then the squeeze histogram, you want to see two bars against the grain. You want to see two yellow bars, kind of like this, against the grain. The probability that this breaks short is almost zero in this market, right? It's just a timing question. And from a timing perspective, getting this here would really set it off. So there was four things that came up on the list. It was Avgo, TSM, Amazon, and Tesla. Just by the process of elimination, I'm just going to go ahead and eliminate Amazon. And then that leaves us with less choices, which is good. So then from there we go to Tesla and we say, what's up, Tesla? How you do? How you do? And Tesla doesn't have any squeezes and it's not in a buy zone. I do think it can have a rather large push in for the next 2 weeks, even without a squeeze. But I can't buy it here. Like, and the reason I say that because I bought UNP high. It's not on sale today, but UMP has a squeeze. Tesla has no squeeze, and it's technically $25 above the buy zone. So I really, really wanted to buy Tesla with you, and I still think we should. It's just going to be done in somewhat of an unsatisfactory way, meaning that I can't buy it until it gets into like this zone here between 420 to 425. So, do I set up an order and we leave it open as a group way down there? Or do we just find something that we can get into and ignore this for now? And here's what I'm going to do. I'm obviously going to watch Tesla. It's a top stock. If I see an entry come up, even though today is, our only day of live trading for this week, if I see something come up this week, I'll get in and then I'll just alert it out as if we were doing it live. Right? I think I've explained this enough so that you'll get the gist of what I'm trying to do. The main problem that I have with this is that it's extended from the buy zone. I don't have a squeeze to justify it, and it is rather far from the buy zone. Doesn't mean it has to come in, but that's my tiebreaker on that one. So then that puts us back into XLY, which is Tesla in drag, and Amazon also in drag, and something funky like SPG. Okay, I haven't traded XLY directly in a long time, and now I remember why. The options are relatively wide for such a liquid product. So IV of 39%, we could do anything. We could buy calls, we could sell put credit spreads, we could buy butterflies. Also, for those of you in UNP, I wouldn't watch your P&L on that one too closely. Just watch the chart. As long as it's going up, it's going to go in your favor. The reason I say that is because it's kind of wide. So like even the price is like up like 80 cents since we got in, they seem to be quoting a lower price on the credit spread, but it doesn't matter. All that shakes out. Okay, guys, I'm gonna have to chase some TSM. It's just what it is. That's just what it is. I keep looking at all these XLY names, and I think they all make sense. But old girl here, TSM, kind of gives me a Lattice kind of vibe. You guys remember Lattice? So TSM is going to be the next one. Okay, so on this one, there's a $37 expected move by June. That's insane. Okay, so with this one, I'm going to do it way out of the money to start with. I'm going to do the way out of the money. I'm going to do the 30/50 butterfly for monthly expiration. Don't worry, I'm kind of just talking out loud here. I'll post all this, obviously. The problem is the delta's too low. Okay, what about the 425, 450, 470? Delta's still too low. Okay, let's go shorter dated since this is going to be a butterfly. So we'll go to the next week. And the upper target on this swing is about 445. So we can place the center at 450 and work backwards. I'll just place it at 445 and work backwards. So 430, 445, 460. Let's widen this out a little bit. What's funny about live trading is it does change the way you trade, because I find myself being a little bit more conservative than I would typically be. Like with this one, I'm sitting here and I'm pricing out a butterfly on it, and I'm asking myself, why am I pricing out a butterfly on something that has a squeeze that looks like that and a breakout pattern that's just starting? And the reason I'm doing that is because I want to give ourselves playability and flexibility. But I don't know if that's necessarily the right move in this market. Yeah. I think this one needs to be done as something more directional. So the easy, I don't want to say easy, the direct trade here is just to do the at the money call debit spread, 420, 430, or make it as wide as you wish. But 420, 430 for next week makes sense. Obviously, the gift of time can never be overstated, to steal a quote from Henry. So going out to the monthly expiration also makes sense. But the setup is so imminent that I'm kind of caught between, and mind you, that I'm trying to trade for a group of people, not just for myself. I'm caught between shorter dated wide butterfly, which I love, or longer dated call debit spread, which I don't like as much actually. It's still fine, but I don't like it as much. Okay, I think this is a fair way to do it. This is a fair way to do it. So I'm looking at the 445 butterfly for next week, 20 wide. It's going for about three and change, three and a half. All right. So I've narrowed down my ideas. I think we can get Simon Property Group. And just risk the biscuit on it. And I do think we should get some TSM. Okay. We'll have another hour here to finalize these. So far we got just actually finalized. We finalized UMP, which was overwhelmingly clear. There wasn't that much to do on that one because the liquidities in the monthly series, so the expiration kind of picks itself. On UMP, the strategy I thought picked itself as well. Again, it doesn't mean it works or anything. You know, it could be a losing trade, but I thought that one was relatively clear. With TSM, I think it's pretty clear. It's just there's so many different ways to do this, and it's actually not as clean, right? Like with UMP, it's ultra clean. This one is, to the eye, it's cleaner than what the indicator says it is. So this one kind of has a similar issue to Tesla, and it's not a big deal, but it is somewhat of an issue. This 75 bull, it really is going to trigger here as the buy zone, right? So it is. This is certainly a chase, but the squeeze looks so good. And if we do it as a butterfly, then it becomes similar to the lattice trade from last week, where we know we're being bad boys and girls, buying far away from where we should, but we are in a ridiculous market, and we can calm the issue to some degree by doing a butterfly, and the IV certainly justifies it. So I think that's the play. Let me take one more look. I'll fire it off, and then we're going to take a break because I haven't taken a break. Yeah, let's go. Let me just go with. Sorry for all the back and forth, but it does change things when you're trading for a crowd as opposed to just yourself. Because I'm trying to, I don't want to say make it more conservative than I typically would, but I am trying to put a little bit more thought than I typically would. I could just go put my Carter hat on and just do out of the money call debit spread, and I think that's a pretty sweet one too. That actually might be the better play. Let me look. 440, 450 for 3. No. I'll just do it that way. Bear with me. I'm just setting up the trade. I'm going to put a qualifier in the alert that you can give this more time, but I think doing it the way that I'm doing it here, I don't like that they filled me so fast. Yeah, I'm gonna post the price I got, but you make sure you work that bid. I got 365. Let me post it. So with the TSM trade, it really, all the hemming and the hawing there, it's not about whether it's a buy or not. It's just about what is the optimal strategy to execute this trade against, but with the understanding that we're doing it as a group. So, I could just, John Carter brute force it and just do out of the money call debit spreads for June. And I think that's, in some cases, in many cases, that actually is perfect. And for some of you, that might actually make more sense. For me, because I have the class or the live trading, I'd like for us to just shorten our time frame and have a really big net and just see what we can catch with it. So I'm going to post what I posted here, or what I did here. So I did a 445 butterfly for next week 20 wide. 445 butterfly for next week 20 wide. And then I'll explain the thought process. And also make sure you work the bid because they filled me right away. So I know I got a bad price. TSM showing breakout potential. Looking for a move into the upper fib target. Okay, I think that's fair. As good as Simon looks, I'm not sure I'm going to buy it with y'all. Just because I don't have that much experience playing this stock. Let me take a look at it. Last time that I remember playing it was a long time ago, and it had a really high short interest. I'm going to look up what the short interest is. If it still has high short interest, that might tip me over into buying it. The short interest I'm showing at 3%, but it is a really proper setup. Right and proper. I'll leave this one up to you. I think this is a really good setup. I'll tell you, I'm going to buy it myself. The only kind of rock in my shoe is just I don't have any experience trading this over the last. I don't think I've bought this. I don't think I've traded this since COVID. So this to me seems like one of those situations where if I can avoid trading something I have no experience with, I probably should do that. But I'm going to buy some for myself, and if you'd like to join, then feel free. But that leaves us potentially room for one more thing to do, but we don't have to force anything. I'm pretty happy with what we have. Does mean it works, but I'm happy with it. So let's take a break. Let's meet back here. Give me 10. Give me 10 minutes. We haven't taken a break yet, so give me 10. I'll be back here at 2:10, and then we'll actually for the last 50 minutes, I'll kind of challenge you guys. Like you guys find something. What are you seeing out there? And then we'll wrap up and go from there. All right, guys. Let's meet back here in 10. All right, guys. We'll start here in 2 minutes, but I did all the things I needed to do, so figured I'd just jump back on the mic. Did any of you guys ever watch classic Simpsons? Like way, way, way back in the day, like 20 years ago. First 10 seasons. Some of the best writing of all time. Truly. You tell people that, and it's like, well, current Simpsons sucks. I'm like, yeah, it sucked for 20 years, but the first 10 years, epic writing. The best writing I think I've ever seen. So I had this I had this scene in my head for some reason. Uh, the Simpsons go to Australia, and Marge and Homer go to a bar, and Homer gets a beer, and it's one of those giant Foster beers from Australia, and the bartender's like a super exaggerated Australian guy, and so Marge wants a coffee, so she goes, "I'll have a coffee," and he goes, "One beer coming up," and she goes, "No, coffee." He goes, "Beer, coffee, beer, coffee, beer, C-O, B-A." I think it's because I've been looking at BE all day. Blue Energy. C-O, B-A. What else? What else did I buy today? It's in the alerts above. We only bought two things. It's TSM and the rail company, UMP. Yeah, the first 10 seasons were the best. It's the only reason I'm not like I'm dumb. Don't get me wrong. I am dumb, but the only reason I'm not like irredeemably dumb is because of The Simpsons. All right, everybody, welcome back from break. So I want to give you guys a little bit of chance to participate. If I don't get any participation, we'll keep kind of looking around a little bit more. I like the UMP, doesn't mean it works, but I like it. I like the TSM, doesn't mean it works, but I like it. The reason I spent so much time on TSM is because I was debating how to go about it. The two different strategies are basically the same. It's just a matter of how do you value time. So in most cases, I think with TSM, going to the monthly series like 2 weeks after where we did and going with like a call debit spread makes sense. And that's just kind of me putting my John Carter hat on. Like, how would John play that? Now, John would probably just play it with straight up calls, to be fair, but he's been he's been chilling out in his advanced age. Don't tell him I said that. He'll never take me to Turkey to get matching hair transplants if he hears that. So he has been chilling out. So he probably I could see him doing like an out of the money put call debit spread on TSM for June. That seems like a Carter kind of move, and I do like that. With you guys in here, I debated doing that. I think that's fine, but we could also get a very decent risk profile by going shorter dated and using a butterfly strategy. And the butterfly strategy I think plays well. And again, I want to emphasize again that it doesn't mean it works, but at least it's thoughtfully executed. The butterfly strategy plays well with this upper target. And that's why I placed the center of the fly at 445. Right, this little last swing here creates a Fibonacci target at 445, which is where I placed it. Conveniently, it also happens to be where the expected move is, so that always helps. And since we're in the, what are we, 25? Yeah, we're 20 wide. So we'll make money anywhere from here to about like there. Right? And that's kind of a big zone. So same idea as the call debit spread for June monthly, which I think almost everybody in here should understand that one. That's very elementary in terms of the difficulty level. The butterfly might sound or feel a little bit more difficult, but it's kind of the same idea. So that's the thought process. Okay, so I'm going to go through the chat and see if I missed anything. And this is your chance to tell me what you see that has a setup that looks good. And if it doesn't look good, then we'll move right along. So I have missed a lot of chat, so let me catch up. When you say a stock is too extended, case in point is UNP. So here's the thing. Anytime that you buy away from the buy zone as designated by the indicator, you could argue it's too extended, right? There's a lot of words that we use, and I'm become really sensitive to them in terms of that don't really make any sense, right? Like I hear people say cheap, and I make the same mistake, right? Like it's just we're kind of loose with our language, and also language is such an imperfect vehicle of communication, right? You hear people say that's cheap. Well, what does that mean? It doesn't. That's a meaningless thing, right? Like if an option costs $1, is that cheap or is that expensive? Well, it's neither really. And if it costs $1 and you have $100,000 account, you're not buying just one, right? So what's really the difference between one option that's $1 and an option that's $10, and you have to buy $1,000 worth? Well, in one case you have to do 10 options at $1, and then on the other one you just do one at 10. So I want to be careful with that as much as possible, but I kind of get what you're saying. Like you're saying, is it extended? Technically, yes. I mean, technically, this is not near the level that the indicator says it should be bought. Now, had we doing this yesterday, it would be a little bit easier because we'd be at least somewhere in this range. So let me kick it back to you and ask, and this is just a general question. You don't post it in the chat. You can answer yourself. This is a max bull. Where is the buy zone? Remember, it's a dynamic buy zone. That's the whole point of the system. So it's not always the 21. In this case, today, the buy zone is going to be the 10. So are we extended from the buy zone? We are. Yeah, we are. Absolutely, we are. However, there's limitations to what we're doing, right? Like, and what I mean by that is I only get you guys one day this week, and then that's it. And then some of you are going to be gone, right? And some of you come back for 2 more sessions, and then some of you, that's it. So I have to make adjustments for the situation. If you were just watching this on your own and you had the ability to be patient because you didn't have, a group of folks in live trading with you, then yeah, I would say, wait for this to reconnect. And fortunately, it'll give you a buy bubble when it does, and then you would just get it then. But then we're also in a market where it's really crazy, and any kind of caution is not rewarded. That's bad habit, so be careful with that. But this is the moment for that. And then also notice all the work that we did to get here. I didn't just go into UMP and said, "Ooh, I like that. Let's buy it." Notice how much I meticulously checked my work. Now, if the trade doesn't work, it doesn't matter because if I do what I just did with you guys, every single trade, over time, it's going to work, right? Like if you guys ever play poker, let's say that you and I are playing poker, just heads up, just you and me, and I get dealt king king, and you get dealt ace ace. You have me dominated, right? All the money's going in pre-flop. I'm gonna bet, you're gonna raise. I have king, so I'm gonna raise you. You have aces, so you're gonna want to put more money in, right? All the money goes in, and then we just let the cards run out. How often am I going? How often is my king king going to beat your ace ace? It's actually you're gonna lose 20% of the time, right? If you have aces and I have kings, even though your aces dominate my kings, aces is going to beat kings 20% of the time. So 1 out of 5 times, even though you have me completely dominated in this situation, you're actually going to lose. But let's say that we do this and then a king comes on the flop and you lose. Does that mean that you ever fold aces pre-flop? You got to play it, right? So I make this funky comparison to just say, a setup is a setup, and this is a setup that is that's quite good. Also, with this particular trade with UMP, we don't really need all that much, right? How much do we need here for UMP to do? We need it to go up $1.40 and then die. Ideally, it goes up a lot more and it makes things easy, but remember, we sold a 280 put credit spread. So if it does this and then that was the end of the move and it's just that, that works perfectly fine for us too. But to finish the point, because I got a little sidetracked, the ace, ace, king, king thing, not only did we look at UMP, I checked all of my work, right? We looked at CSX, right? That's a companion stock, banger setup, super amazing setup, maybe even better. It doesn't have a squeeze, but maybe better. There's another one, NSC, Norfolk, you know, just monster setups, classic patterns that I recognize with squeezes and breakouts. And then I even checked IYT, which is the broader transportation sector basket. And this, is a monster breakout setup. So let's say that we come back, a week, 10 days from now, and the rail company is bankrupt or whatever, and the trade doesn't work. I would do that trade over and over again every single time, just because we checked all the work, it checks all the boxes, we executed in a thoughtful way, we put as much edge as possible, and then we release ourselves from the outcome. Remember that goes back to the thing that I told you was the most important thing in the class, which is at some point, the indicators are here to allow you to release yourself, right? It's really important. It sounds like woo-woo kind of hippie stuff, but it really is. It's the game changer, really. So if the trade works, the indicator did the work. I'm not special. I'm not smart. Everyone's a genius in a bull market, so it's not even that impressive. But if the trade works, don't give me any props. The indicator did it. If the trade doesn't work, I'm not an idiot. I'm not all the childhood trauma that we all carry, right? All that stuff that bubbles up, right? You just let go, because if it doesn't work, I checked all the boxes, I did all the work, I put as much edge as I could, and the indicator did it. So you see how that removes the barbell and it removes the emotions? I can never get euphoric because this isn't my work. I'm not a genius for finding UMP. The indicator did it. And if it doesn't work and UMP goes bankrupt, I'm not a complete moron, not worth being on the bottom of someone's shoe, because the indicator did it. That's a beautiful thing. It's not discussed enough, but it is a beautiful thing. APLD. So remember the next couple minutes, I want for you guys to throw picks that you're either actively trading or that you have seen the indicator likes, and then we'll see if you can find something better than what we have. APLD looks like a beast. Yeah, no, this is one of the ones, when stuff comes up, it should be immediate. The only issue that I have with it is it doesn't have a squeeze and we're buying it away from support. The entry was this morning at the 10. Great chart, but no particular interest on that one. So David's calling out a bull trap on Tesla. The bull trap doesn't overwhelm the score. So the reason this has a bull trap is actually probably from this candle here. And so that created the bull trap. No, I wouldn't overwhelm the score with the bull trap. What I would do is prefer, because an 80%, you should know where this triggers. Where's an 80% going to trigger the buy? It's going to trigger the buy somewhere in here, right? Near the 20. So the distance is very big here. Now Tesla could be up 40 tomorrow easily. But the bigger issue is not this. That's somewhat of a non-issue. The bigger issue is the spread between where the score says to do and where where price currently is. Amazon using Squeeze Ultra shows a mild squeeze on the daily. So here's one thing I'd like for you guys to do, since some of you may have the Squeeze Ultra. Compare the Squeeze Ultra to what the scores say, and just mentally keep track of what's going on there. What I will tell you is that the Squeeze Ultra, most of what the Squeeze Ultra looks for is already built into the True Momentum system. The only thing that's not built in is that the Squeeze Ultra removes high compression squeezes as ideal squeezes, which was a very good bit of code to include. So I like that they did that. But essentially, the Squeeze Ultra is just looking for stack moving averages, and that's already an input into your trend. So here's kind of a cheat code for you. If your trend is ever dark green like this, it is a ideal squeeze. Amazon might just be going for it here. It has one half of what I'm looking for at this point. The only concern that I have is that the other half may not materialize until it's like $20 higher, because it's you see how now it's flipped this level. So check out this polarity here, and this isn't anything magic, guys. Like, just run your retracement, and you can get rid of everything and just know where the 618 is. So you see how it was resistance here, and now it's acting as support here. That's a big deal, right? That's not something the indicator can do for you, but noticing this is a big deal. So that's a polarity flip, right? It went from resistance to now, at least temporarily, it's now support. So that gets a check for that. I'd like to see the squeeze histogram give me a hook, and I think that kind of sets it off. But this looks like it could be ready to go. This is kind of a reversal pattern too. We had okay luck with Amazon the first time. Maybe we could run it back. Okay. I actually don't mind getting more Amazon with y'all. Here's what I'll do. On this one, I'm going to have to price it lower. I would have to price it lower. And then, just because we already have 2 trades, and we did 4 trades last week. So on this one, I'm going to price it to fill at 267. 267. But I'm not sure what that would be. It would more than likely be an out of the money call debit spread for June. So I'll make sure to post that at some point today. Yeah, because this is just a really big deal. Like, think about it from a psychological perspective. We're getting weird here because we're not talking about the indicator anymore, at least for now. This is a very big deal. Now, it wouldn't look like a big deal if you didn't have the level already on your chart. So make sure that whenever you have a clearly defined high and a clearly defined swing low, that you're very adept at putting your Fibonacci's there and focusing on that 618. And this is just a really cool example. We'll come back to it. Is there an argument for a cash secured put or a put credit spread on a great setup that we're just waiting for a pullback? Let me read that again. Is there any argument for a cash secured put or a put credit spread on a great setup? No, absolutely not. I mean, if you have a larger account, absolutely. That's a great way to do it. Yeah, I mean, it's a great way to buy things for the cheap too. The only issue with that is you need to have a pretty big account. So I would be able to like post like, hey, I'm gonna like on UMP, like, yeah, I'm gonna sell the naked put. But if you have the account size for it, I do like the idea, and I like the strategy in general, broadly speaking, because it allows you to buy cheap things on a pullback, and you're getting a credit to start with. So instead of saying, hey, I'm going to buy, like let's say the stock's trading 60 and you want to buy it at 50, Okay, well, you could just wait and buy it at 50, or you could sell the $50 put, take in some credit, and then if it drops and gets put to you, then you just bought it at 50 and you got the credit. The only That sounds great, right? The only downside is you typically need a relatively healthy sized account. What call debit spread strikes on the? I'm assuming that's TSM. Frankly, anything. I mean, I don't want to be overly flippant about it, but if it works, just anything really. I'll give you a better answer, but this is one of those ones that if it works, you could use anything. Because it doesn't really matter. Like if you were to do like the smart way to do it, which would be the 420, 430, something along those lines, you know, for less than $5, that's just the boilerplate answer. So maybe I'll just give you that answer, 420, 430. I think someone like maybe like Carter here would probably look at something like 430, 440, maybe even 425, 440. I would personally go out of the money with the debit spread. So if you're going out until June, to me, something like 430, 445, 430, 440, 430, 440 looks good. The pan W chart looks good. 4 hour looks good. 78 minutes shows a bubble. You guess you should wait for a reversal signal on the 78 minute or pretend I didn't see the 78 minute. That's always a good way to do it. I'll just pretend I don't see that. On this one, I would personally wait for a reversal arrow on this one. It's really close to a max bull. See how the chart's 90? You see how the green and the red here? Once that little green crosses the red, and that'll happen tomorrow. This is going to go max bull, and it will actually trigger a buy here. So you definitely want to keep an eye on this one because tomorrow, if nothing happens, this one goes max bull. I want you guys to be able to do this to some extent because notice how I'm reverse engineering it, right? I want you to get to this point that you can do this. Now, granted, I made the thing, so and I'm kind of front running it, but notice it's a bull 90. Okay. Well, the dark momentum is dark green, so we know that's good, right? We know that's good and that's good, so we don't have to check that. Trend is light green. Well, why is that? Where's it missing points? Why isn't it dark green? And this would be max bull. And so trend is ATR, which is fine, and moving average position. You have the 10, you have the 20, you have the 50, so 20 above the 50. But notice that the 50 is below the 20, or excuse me, the 200 is on top of the 50. See it? The bottom of the cloud. By tomorrow, that'll be fixed. So you want to be looking for a buy zone on this one, probably closer to about 242, or if you get a reversal signal in the hourly. Interesting setup, though. Didn't have this on my radar. I'll go back and look at this with the big room tomorrow. I think we answered the question about what else did we buy. It's in the alerts, TSM and the rail company. 1 minute thrust checked, confirmed. What I've gotten in on the ES. Honestly, realistically, unless I was really, really focused on this, I would have probably left this alone and been doing some variation of what we're doing right now. There's a lot of gray here, and a lot of the signals are. I'll tell you this much: I would have only been able to trade it long. Right? Remember the conversation from earlier? You had asked about it somewhere like way down here, and I was like, even though the candles are red, or maybe it looks like it wants to go short, I have no interest in shorting. Remember that conversation? That was like, and then it rallied 30 points off the low. So I don't actually think that today is a super great day to talk about day trading. I'm very happy to, but I don't necessarily think that today is a good day to talk about day trading. Now, I'm trying to figure out kind of where your question was. So, because I want to, give it the attention and time it deserves. You mentioned at 209, so that would have been about right here. No, I wouldn't be shorting this. I can't, I can't short this. It's the signals just are not the same. If you get a bear signal and a bull signal in this market, those two things are not worth the same. You know what I mean? They're just not. In fact, bear signals are just an excuse to get ready for a bull signal coming up. I don't even want to go down this path necessarily because it's a weird time, and I don't want to breed bad habits, unless this is just the new normal where stocks only go up, which it might be. But in this exact juncture in time, and I've already talked about this, in this exact juncture in time, we are in a 0.1% market, not 1%, 0.1% market, in my opinion. And therefore, I'm flat ignoring sell signals. So I think you were talking about this one based on the timing of your question. You asked it at 8:09. Would I have taken that as a short? No. If you were asking about this one as a long, honestly, still no, because you're below the 200 over here and it's gray. Here's what I'll tell you, because I think this is something that I wanted to stress in the class, and this gives me an opportunity to stress again. Most of the time in markets, and I'm sure you know this, but it's worth repeating, most of the time in markets, you're staring at static on a television. We're all old enough in here to remember static on a television, right? Nowadays, there's no more static on television. I know, maybe kind of Captain Obvious, but it was a surprise to me. We all remember static on a television. Most of the time that you're staring at markets, they're static on a television, right? And if you are trying to make sense of it, oftentimes it's a big waste of time. So I'll give you an example. So somebody asked about in an email, although somebody in here did too, asked about what to do with this 0% gold chart that is trying to load up. And they were like, what direction is this squeeze going to fire and what's going to happen next was essentially the question. It's a 0% chart. Like, you guys have the indicators. You know that neutral is like from, what, like negative 40 to positive 40? You don't see a lot of zeros with my stuff, right? Like dead center. And so my point to them, and I'll use your question as a secondary point, I don't know what's going to happen here. That doesn't make me less of a trader. That doesn't mean that I'm dumb. That doesn't mean that I'm just not with it. It doesn't mean anything. It means that my system says nothing. And here's the thing. Most of the times the system's going to say nothing. So just, it's just a moment in time. We just let it go. So would I have done anything here on any of this? Realistically, the only move I could have seen myself making here, realistically, Captain Hindsight, the only move I could see myself making here was right here. And I probably would have gotten dumped out here. Realistically, just because this was intact, this would have hit, this had a buy signal. But in most cases, this is just noise. I'm going to short Meta here once they realize their billion users aren't going to pay for the subscriptions. All right, so I might just leave us an open Amazon alert, and that'll be the last thing we do. Unless when you find folks find something amazing and perfect. This is both amazing and perfect. The only thing that's not perfect is that it's so good that it has escaped my entry level. This is good though because we saw a lot of biotech coming up, and I think this is like biotech and drugs. Great if you have it, not really something I can chase. If it still had a squeeze, I could maybe justify it. and I think it has high short interest, so it probably works, but it's not really the setup. I see that clearly. Google. I was hoping Google would come up. No, I kind of wanted to do a non-directional trade with y'all. I came into today really wanted to do a non-directional trade, and I didn't do it. And the reason that got my attention was because it would have probably been on Google here, right around 390. I think Google's just coiling up for its next move. It had ample opportunity to break lower, and it didn't. Right. One thing that is always really important to ask yourself is when a stock is doesn't do something that the indicator implies that it should do, it's usually going to do the opposite. Right. So in this case, you have this low here on Google, and it's just the indicator was implying that it should have broken short. Now, granted, Google has not participated with the market, so it hasn't really done all that much. But this low has been just made of, you know, it's the Great Wall of China. So I think this is just waiting to reload. The IV is a little bit low to try to do an iron condor on this, but I'm kind of tempted. This might be an idea for tomorrow. I also have to remember that I can message you guys for the next couple of days, and it's not a problem. So 4 trades the first day. We have 2 so far. Averages out to about 3 per day. I think that's pretty fine. So I just have to be okay with that. But don't be surprised if you get something from me looking for a sideways trade, either in something like Google or Microsoft. Just been itching to do a theta trade. No, Charlie, on Google, I view that as a consolidation pattern waiting to go higher. If some nit shoves, you'd fold kings. I remember the one time I folded aces. It wasn't pre-flop, though, obviously. That would be ridiculous. But I did fold aces on the flop one time. It was like, the flop was like 8-4-2. And fortunately, when I folded aces, the guy showed me what he had. He had pocket eights. So there was an 8 on the flop, so he had a set. So he would have beat me. The worst beat I ever got in poker actually was with kings. I had a full house kings over sevens, and the guy that I was playing against he had quad fours. He hit a 4 on the river. No, mine was kings into fours. Excuse me, kings full of fours is what I had, and he had quad fours. It was almost like a $6,000 pot. It's one of those hands that feels so disgusting because he didn't beat me until the river, and then he catches the one card he needs to get four fours, and he takes like $6,000 off me. And it's one of those hands that's like so gross that I didn't even get mad. I just like calmly walked away. Like that was unlucky. BE. This is going to be one of the ones that I'll be watching as well, and I might just have to touch base with you on it if I decide to get in. I can see why you're trying to get in. I really do. Like the daily is kind of prime. My only thing is that I called this out yesterday, and it actually did play out, which was this. You see how this all-time high happened under a red condition? That's weird. That shouldn't happen. So yesterday in the room, I told them that they needed to revisit the daily 10, which it did today. So I don't know if this condition has been resolved or not. A little arrow boy there would certainly go a long way. So I don't think there's a rush on this one. I'll be able to watch this one tomorrow morning, and if I see an entry, I'll post it. There's going to be like three things that I'll be watching to potentially post in here with you guys as an additional trade tomorrow. It's going to be Tesla, Amazon, BE as potential additional trades that I don't see a spot to get into exactly today, but keep your alerts on. Morgan. Yeah, this one could work. That hourly is a nice. That's a nice hourly. That's pretty good too. I don't know if I want to play the financials, but on its own, it's not bad. Where are the financials? Yeah, the financials are way down here, so they're at 25 overall. It could work, but I want to focus because keep in mind, I'm trying to show you guys best practices, right? So while you bring up Morgan, and it's like, yeah, this is proper. That's a good setup, nice breakout. It looks like continuation retest. The hourly to me, I recognize this hourly as a beast of a chart. This normally I would buy weekly calls on this. I probably should, like that expire like in 2 days. I recognize all that. What I'm really trying to do, I have two goals for my live trading. Anytime I do live trading, I have two goals. The number one goal is to pay for the live trading with the trading, right? That's number one by far. Although it maybe shouldn't be, because what I'm about to say probably should be number one. The second one is to show you absolute what I think is best practices using your new indicator, right? And so while Morgan, that you point out, MS, does look really good, and I recognize that hourly pattern is a really explosive one within 1 to 2 days. If one of the things that I showed in the class was index sector stock, right? With Morgan, it's in the XLF, and XLF right now grades out negative 25, which is just neutral. So best practices would have us looking here, not so much down here. Doesn't mean it doesn't work. It certainly looks like it will, but hopefully you get what I'm saying. When a really big goal for me is to show you best practices. And so earlier when we bought like the railroad company, notice how much time I spent on that. Right, I looked at the competitor. I looked at the peers. They all look good. I looked at the sector. That looked good. And so that's just my 2 cents on Morgan. I don't know what this is. Maybe copper? It looks okay. I don't. Unfortunately, I don't know what it is, and because I don't know what it is, it's probably not super liquid. Roku. Great chart, breakout pattern, doesn't have that squeeze, right? So here's kind of the way that I like to think about things. I don't mind necessarily chasing something if it has a squeeze that's in the process of unfolding. If it doesn't have a squeeze, then I really want to buy it at the buy zone, right? So with Roku here, the buy zone is 126. If it had a squeeze like the railroad company or like TSM, I don't mind chasing it a little bit. And frankly, this is another example, and that we've seen many today, of another example of something that looks really good, but it doesn't have the squeeze or the proximity to the entry, right? So if I'm going to chase it, then I want to squeeze. If I don't have a squeeze, then I don't want to chase it. But if you buy the pullback on this looks pretty good. Use a sage advice. SPX day and hourly. Saw a bull trap, went lower. Saw a hump. Saw a hump. Then went lower another level, and 15-day it was a bear trap. So what does that say? Contradicting things to me. So I wouldn't put that much weight on the bull and bear traps. Remember, I think I taught these correctly, and that is that they are inert, right? So something that is inert is, and maybe I shouldn't use words that I can't easily define, but inert to me means it's like gray wall, right? It's just there, just it's not active, it's not reactive. The bull and bear traps then trigger. So the way I described it in the class, and the way I'll describe it again here, is the traps. When you see a trap, think of like the chart is now covered in gasoline, right? Now, if something's covered in gasoline, is it accurate to say that it's on fire? It's not, right? Now, if you light a match, then it's really on fire, right? Because it's covered in gasoline. That's what traps are, right? So if you see a bear trap, like for example, this was a bear trap, right? This is a classic one, very basic one, and this is the bull's best weapon over and over again, nonstop, right? So this was a bear trap, right? You have this low, you have your white line, you have your swing level, you see this little poke below, and then the pop back above, and then you run it back to the top part of the range, right? When you see traps, all that is an accelerant. It doesn't change. Like if I see a max bull but it has a bull trap, I don't care. If I see the opposite and it has a bear trap, I don't care, right? Also, if you're going through your different time frames and you're seeing some time frames that have a bull trap, some time frames have a bear trap, just ignore all that and ask yourself, what is the time frame that you're focusing on, and then focus on that time frame with the understanding that if that time frame, let's say it's the hourly, and let's say it's a bear trap, so it would look something like this that I just drew in. Understand that if you're looking at an hourly bear trap, and then it triggers, meaning that you get this dynamic that I showed you in the class, then it will go, usually a lot faster and stronger to the upside. So to put a point on it, to kind of relate it back to something we all understand, a trap, bull or bear, is kind of like a squeeze. Squeezes are inert as well, right? Like the squeeze doesn't really tell you anything other than there's energy here. Think of traps as the same way. They're energy, and then once you get candle color changes, that then releases the energy. But if your main question or concern was that you're seeing like a bull trap on the 30 and then a bear trap on the hourly and maybe a bull trap on the daily, and there's conflicting data there, ignore all of that. Because the trap thing is really, there's no, the score, which is really what matters and what drives everything, is not even looking at traps. So anytime there's conflict, here's my best bit of advice actually. Anytime that there's just walls of gray, whether from a candle perspective or, well, I guess in this case only from a candle perspective, walls of gray or just any level of confusion, ignore it. Don't try to figure it out. Your job is not to decode the market. If you ever did, I promise you that two nice men in black suits would show up at your door and kidnap you. So it's probably the best that you don't figure out the market. If you see anything that is not overly clear, just ignore it. Move on. And I know that can sound flippant, but it really isn't. It really is like probably the best bit of advice that you've gotten in the last 3 hours. I'll just give you the example. So, so we'll use this railroad company again, just because it is clean. Notice that there was sometimes stuff came up that even before it came up, even before the chart fully populated, I was like, ooh, that it should be that clear. So with something like UMP, to me that's a really clear setup. Something like TSM, to me that's a really clear setup. Anything that is not immediately clear, just in my strong estimation, you should probably just ignore. 1250 long off the high-low thrust on ES. 1250 long. So I hope we're in the same time zone because calling out 1250, and you didn't tell me what time frame. So I can't really I can't really reverse engineer that one. I need to make sure that we have the same time frame as well. So you said 1250 long off the high-low thrust on ES. Probably here, this 15-minute. Okay, so yes, if you want to be here's kind of the thing, guys. Can you take this signal? I'll turn it back to you. What have I taught you guys? When you have gray bars, the signal comes from high-low, right? So in this case, is this a valid signal? Yes, it is. Is it your best signal? Is it the highest probability signal that you can take? No, right? The highest probability signal is the green bars to pull back into support, red bars that go into resistance. So the question really, I'll turn it back to you because you're definitely getting it because you've you isolated an interesting point here, and I'm assuming this is what you're talking about because it lines up exactly with what you're saying. Is that unto itself, is that a buy signal? That's up to you to decide, actually. That's what that means. Because if it was, I would have coded it that way. Now, maybe I do have a little bit of a buy here. I should check. That's one of those weird spots where I, I can't tell you if a buy triggered here or not because I don't know what this score was here. So let me check before I run my mouth. But at the end of the day, I'll front run what I'm going to tell you no matter what the result of this is. If you're buying gray bars and you're using the high-low as your singular signal, you can do that. That is an acceptable way to do things, but your probability of success is diminished. And as long as you're okay with that, and you can accept that that is a lower probability of success than doing it the correct way, which is green bars pulling back to support, triggering a buy bubble, etc., then go for it. But if your goal is always to maximize your edge, in most cases, for most people, this would not be anything. Yeah, so it didn't trigger a buy. Sometimes it will. These are a little bit more complex. The only reason I can't tell right off the bat is because I don't know what the score of this bar was. So if the score here was like 80 and then it went to 55, negative 55, it would have triggered a buy. If it's 70 and then it went to negative 55, it does not trigger a buy. So in this particular instance, I couldn't tell you without actually seeing the bubbles whether that triggered a buy or not. But in this case, now that I can see the bubbles, it did not. So hopefully that makes sense. You're asking kind of a complex question here, and really it's not so much that it's complex; it's that it's individualized. Here's how I would say it. Sorry to ramble. That is an aggressive buy. If you want to get into that, yes, go for it. That is an aggressive buy. So what does it entail? It entails you're going to get more of those signals. They're going to have a lower probability of success. The highest probability of success is always going to be signals like this that I'm going to show you. So your highest probability of success is always going to be signals like this and like that. But yes, to put a point on it, you could have taken the long off the high-low thrust 15-minute at 1250. It is an aggressive entry. With ASTS, I doubt there's anything to do. Yeah, I mean, you just gawk at this. I mean, you and I talked about this one in the email. Yeah, I mean, I think you played it more aggressively than I did. I had broken wing butterflies on this, so, but there's nothing for me to do on that. Mondelez, Meta, and then we'll wrap wrap her up. We'll wrap her up. And then just to make sure everybody's on the same page, since I'm sure some of you will leave here at 3 o'clock, although you really should stay. I'm going to look for something to do in Tesla, Amazon, and remind me of the other one. Tesla, Amazon, and BE for tomorrow. Those were only an issue because of an entry timing perspective. So I just have to watch those in real time. But I'll almost certainly send out something on at least one of those tomorrow. Probably Amazon. Meta with a nice pop here, out of nowhere. Review Meta on the 1 hour and the daily. So the 1 hour just went from gray to green, and the daily's still gray. So I've rambled a lot. That is my nature. If you get me uncensored on a mic for 3 hours, you're going to get some rambling. I do apologize, but I do think that I do bring you a lot of good stuff. And I will recap and finish with what I believe to be one of the best things that I can tell you today and forever, because you're the owner of these indicators for the rest of your life. Lucky you. In reality, lucky you. You guys bought a $1 bill for a penny. Lucky you. I'm not going to try to make too much sense of neutral charts, right? So, and I know it sounds flippant and it sounds like maybe an unsatisfactory answer. It's going to save you hours of time in your days, if you think about collectively, maybe weeks and months, collectively of just gray, move on, gray, move on, gray, move on, gray, move on. If you happen to have a specific reason, here's the only way that I would not do this. If you fill out your sheet, and for example, here's ARC, and ARC from the outside is gray, but from the inside, and the inside is 4 hour, 1 hour, 30 minute, it's green, right? If you fill in your sheet and from the outside it's gray, but from the inside it's 75% or higher, understanding that we're looking at 3 different time frames, then I would be a little bit more interested in it, because then that way the green can feed back into the gray. But a real takeaway for the last time, I do promise, I just want to drive this point home because it's really important. Don't spend a lot of time analyzing grays. The time that you spend looking at grays, there's a green that just walked by. So my analysis on Meta is just that. Nice pop. I don't think anyone here would have caught that unless they were just already in it, and I don't even know why they would be in it because it's a mediocre chart below the daily 200. Doesn't mean you can't go higher, but if you get what I'm putting down there, that's really going to help you a long time. Mondelez here could go. Very boring chart, very boring stock, I should say, but it has all the right pieces to it. So not something that I like to trade because it doesn't usually trade the way like indexes or tech trades, but it looks okay. Is there an ideal IV to sell an iron condor? I mean, not really. You can do it at any IV. It's just usually if I prefer for the IV percentile to be, at least 40%, 40% or higher. No, David, I appreciate it. No, I feel like we might be coming to an agreement here. So let me see if I can make sense of it. So not to beat a dead horse, beating a dead horse has kind of been my thing lately. With I really enjoyed it. With gray candles on a 5 minute ES and a 1 minute at 1250 with the ES 1 minute. Okay, I got to slow down. Not to beat a dead horse with gray candles on the ES 5 minute and 1 minute on 1230 at 1250. With the ES 1 minute thrust checked and confirmed and the 5 minute strong thrust confirmed, do you consider that a valid day trade on ES using these indicators appropriately, or am I off center? From what I can tell, I'll look at it. From what I can tell, I think you might be trying to. Well, let me check before I say that. Let me check. Gray candles at 1250. So you're talking here. So this was correct. You're talking here. Okay, I understand that much. And then the corresponding moment in time was 1250. Oh God, I can't. I'm having a hard time reverse engineering your trade here, man. 1250. Okay, so 1250 is right here. Okay, so you're looking here. Okay, so now I can do it. Just I had to get my time right. Okay, so you're looking here and here. So I think we just end up right back where we started. Is this a viable setup? Gray candles, look below. I think you definitely have the right concept, which is gray candles, use the high-low. So you definitely got that down. The way I would answer the question is really just by repeating what I said earlier, because I think that was still correct even after seeing it more granular. When you're using gray candles, right? So this is the takeaway for everybody, even if you don't care about this conversation. When you're using gray candles, use the high-low as the signal. When you do that, you are giving yourself less edge than if you had green or red candles to trade directionally. That's it. So, are you reading the indicator correctly? Yes. If you are a very aggressive day trader, 5 in a 1 minute kind of implies you might be. If you are a very aggressive day trader and you're very good with risk management and you know where your stop's going to be, I think you can take that signal. For anyone else that might be newer or have any type of trepidation about taking lower quality signals, I would avoid that completely. That's how I would answer the question. Steve, yeah, well, what I will say is this, Steve. Here's how I'll answer your question that's politically correct. The hardest thing for traders to develop is patience. You guys have what I believe to be the best indicators I have seen. Right, I put in 9 years of work. If I could have made them better, I would have made them better. Excuse me. Right, I've been here at Simpler Trading for 9 years. Like I told you guys during the class, webinar, all that stuff. I've seen everything that's come out of Simpler, right? I've seen everything that's come out. I've looked at the guts of it all. I know how it works. I've seen everything. I've taken bits and pieces of everything that I've seen that's good, and I put it into this indicator. You guys have had a chance now to see how it works. Hopefully, the vast majority of you are resonating with it. So, and I could teach you that in a class, you know, 5 hours, and then of course we did the bonus, so maybe 7 hours total. I could teach you that in less than a day. I can teach you how to scan in less than a day. We've done the live trading. Last week went well. We'll see how this week does. I like our pick so far. I like the process that we followed. I showed you how to get as much edge as possible, right? Notice how simple it would have been to just find good things that have green bubbles and buy them. We didn't do that. We went through every individual part of this. We went through the index first, then we isolated the sector. We looked at peers to make sure that the peer group was the same, right? And then we thoughtfully executed a trade on top of that. All of this stuff I could teach you in less than 24 hours, right? And you'll be pretty good. And then you'll go out there and you'll swing at the club, and then you'll say, "Well, Sam taught me this, and I get it, but I'm going to change it just a little bit. I'm going to put my thumb on the left side. He said put my thumb on the right side. I'm going to put my thumb on the left side because when I put my thumb on the left side, the ball goes straight." Perfect. You've made it your own, right? I want you to do that. I'm showing you how I designed it to work. You then make it your own so that it works even better for you. I could show you all this in less than a weekend. The one thing that's going to be a constant struggle and the one thing that's going to give you edge or will take away your edge, and this is important, the one thing that's going to give you edge or take away your edge is the thing between your ears. And that part, unfortunately, if you give me a lifetime, I couldn't teach you how that works. None of us are born with a manual for that thing. One thing I can tell you is that the vast majority of traders don't have a good patience gene. They just don't. Myself included, maybe. I'm not going to say I have a good patience gene either. It is a very difficult thing to learn and to develop. So if you are someone that can have that patience gene, that's an additional bit of the edge that you've given yourself, right? This whole entire live trading session today, I've had some goals that I've wanted to hit, but maybe unexpectedly one of them is also showing you how all these little edges add up, right? Like how much edge do we get by looking at the sector, whether it was semiconductors for TSM or transportation rails for UNP, how much edge do we get by looking at the sector and the index first? Maybe 1%, right? But these 1% edges add up. So now we have 1% edge there. If we have the patience to wait for a good pullback or a good entry, now we have 1% edge there. Next thing you know, you have two identical traders trying to do two identical things, and one has like 4 to 5% more edge than the other one. That's huge. It doesn't seem like a lot. People want like, huge edges, but these little edges over time are everything. So to answer your question, I'll answer it in a politically correct way. The hardest thing to teach you is patience. I can show you everything perfectly. I can show you the indicators perfectly. I can show you the strategies perfectly. I can show you, the thought process from index, sector, and stock. And then somebody will just go out there and just splash around and throw money at things. So if you can really work on that's really your next level. And let me also tell you this: it's not going to come fast, and it's never going to come. Right? I don't want to take the wind out of your sails, but this is something you signed up for the rest of your life. Not necessarily trading, but just improving and understanding your own psychology as a human. Right? This is why I resonate with John so much. The number one thing that I've learned from John is not charting. I learned way more about trading from other traders here than I have from John. But one thing that I've learned more from John than anybody else by far is the psychology of living as a trader. And it sounds like woo-woo, but it's not. It's the most important thing. Thank you, Dev. Thank you for being here. And thank you as well, Jasper. Appreciate it. You were bringing up as a neutral candidate for Meta. Let me go back. I've gotten so used to everybody wanting directional trades. Yeah, you're actually right. You might be right about this. I'll have to figure out what this little spike was about because that looks kind of newsy out of nowhere. But this fits the bill. This might fit the bill. The IV's good. Okay, I apologize. I take it back. I thought you were kind of looking at this more as a, and that's on me, right? I did tell you that I wanted a sideways trade, and then you bring me a neutral chart, and I give you a 30-minute lesson on avoiding neutral. Let me keep an eye on this one. Meta is not on my radar. I was more looking at Google for that, but let me jot it down, and I'll watch it into Friday. Thank you. The IV label's in the room drive, I believe. All right, guys. So I'm gonna wrap it there. Thank you for being part of the second live trading. I know that some of you are only going to be part of this for 2 days, and then of course some of you are going to be back for days 3 and 4. For those of you that will be only doing this 2 days, we're going to keep the room open, at least for alerts and things like that. So I will have a chance within the next 2 days to see if I find something else. I'm looking towards that Amazon. I'm kind of liking the fact that it closed above 270. It's got a couple of points that line up with XLY. I also want to like Tesla, but I think maybe Amazon just might be the more clear direct trade because it has that squeeze, which I like. It's pretty close to the buy zone, and if it stays above 270, it could actually become kind of a monster into June. So I'm going to be looking at that one tomorrow for an entry. If I see something on Amazon to do, I'll post it. And then for those of you that are doing this for 2 days, you'll still get the alert. For those of you that are doing 4 days, obviously you'll get everything. And aside from that, then we'll just let the UNP trade. That one is going to need some time. TSM is shorter dated, so we'll keep an eye on that one. But don't expect for me, unless something really changes with TSM, that one almost certainly has to go till Monday no matter what. And thanks for the lively session, guys. You guys kept it fun. It's not easy to do 3 hours on the mic. It wears you out, right? It wears you out in your voice. It's a lot of words. I ramble a lot, but you guys always make me feel like there was some pot of gold at the end of this winding road that we took. So I always appreciate your participation, and I hope you have a great rest of your Wednesday. Cheers.